So, with the flooding here at home, we are expecting still a positive day on the market, but we continue to count the cost and get updates from corporate Australia about the damage. In terms of monetary policy, it is expected to become increasingly difficult for the RBA to manage the economy and expectations as this flooding in Queensland pushes up food and also wage prices. We're joined by Jim Stening from FIIG Securities at the FIIG camera. And just firstly, Jim, give us an idea of how badly you think that Queensland businesses are going to be affected.
Yeah, good morning, guys. Yeah, look, I think, well, nobody knows the real extent of how they'll be affected. But you know, I mean, once the floods subside, we'll have a better idea. But as I understand it, 75% of the state is actually a disaster area. And so, you know, when you look at the Queensland economy, it cuts across all aspects of the economy. So whether you're a financial services provider based in Brisbane, or whether you're in tourism or transport or the resources sector, absolutely no question, you know, your business has been affected. So, you know, I think key things like cash flow and collateral, these are things that have been severely compromised, and how long they're compromised for, we just don't know. So those are very negative things.
Jim, just from a personal perspective, from say FIIG's point of view, just to give us an idea of the way that people will be impacted. What do you think at the moment as to how you'll be impacted? Is it because you won't get new business, or people are just not focusing on their financial investments at the moment? What do you reckon?
Well, I think, you know, like any business, I suppose we're a little bit different in that we obviously have centres in Sydney and Melbourne, and our business is very transportable. But it was, from a personal perspective, a very challenging thing to implement a disaster recovery plan, because obviously, you know, every disaster is unique. I mean, not being able to communicate with individuals whose power is out, who don't have access or can't get to the building, they're small things for our business. And as I said, we're not heavily reliant on infrastructure, so the mind boggles as to how these various companies and the knock-on effects to their business, how it's all going to play out.
Yeah, it's those knock-on effects that I think prove quite interesting, particularly for the business world, yeah.
You know, Jim, what has to be the next phase of a response now? Anna Bligh just seems to be go, and there has to be a sharing of the burden. We've heard the Queensland Treasurer on Sky News Business just yesterday talking about the federal contribution to all of this. What are you hearing?
Well, look, I don't know. I mean, hearing numbers bandied about, and numbers seem to be doubling. I think this development, you know, which is only really 48 hours, that this flood through the CBD is obviously got significant costs to it. And I think, you know, once we see the full damage, I think that unfortunately we will probably be surprised on the upside.
And so do you expect, one of the key questions we asked Andrew Fraser, I think it was last week, was whether the ratings for Queensland will remain intact. Do you have a view on that?
I'm sorry, I missed that.
The credit ratings from the ratings agencies.
Well, look, I suppose, you know, again, that comes down to the extent of the damage and how quickly it can be repaired. Obviously, you need to restore revenue, and infrastructure repair plays a big role there. So I think, you know, that there might be, you know, I don't necessarily think that a rating downgrade is something that's going to happen in the very short term. And I think, obviously, that the Commonwealth Government is incredibly well placed to stand behind Queensland, and they've given every indication that that's their intention. So that's very satisfying.
Just to remind viewers on that one, and it's coming out of ComSec, this contingency reserve fund in the next 3 years set to stand at $11.4 billion, Jim. So, you know, there is money that is there for these types of incidents. Is there a link, as you're watching that Australian dollar, which has kind of bounced back, is that giving you a sense of investors' appetite for taking on Australian risk at the moment?
Well, I suppose that's a great barometer. I think one of the difficult things with the Australian credits is that you know, a lot of our larger institutions fund themselves offshore. So it's satisfying. It's very comforting to see that you know, the Australian dollar doesn't have a big negative sentiment or momentum behind it at this stage. You know, I think one of the challenges for the Reserve Bank going forward is obviously the strength in the Australian dollar has played a huge role in inflation remaining under control. So where we go from here, again, that could be a different story.
You're pushing out now what, a Reserve Bank tightening, significant, or this will just force them to sit on the sidelines, what, to about August?
Look, Carson, I think that's right. I think that really this has to play out. It's an unprecedented and an unprecedented disaster, and as I said, the knock-on effects and ramifications won't be known until we actually live through it. So, you know, I really do think that this will stay the hand of the RBA.
And do you think that, what about this chance being priced in of a rate cut?
Well, I'm not certain about a rate cut. I think, you know, one of the things that we have to factor in, as I said before, is that the finance sector is obviously, you know, with cash flows and collateral being compromised. You know, there may be decisions made that don't involve the Reserve Bank as far as lending goes to various sectors and as far as margins go. So I guess that the markets will determine that.
Jim, when it comes to practically just cleaning things up and then the specialist skills that are going to be needed, is this actually going to prove an added inflation burden, you know, in very crude terms, but in also a real sense, the way that could ripple through the economy, the fact that you need to get people into the state to really address. You look at the apartments, you know, the quantity surveyors, the structural engineers. If you don't have that manpower, you're going to have to pay to get it.
Yeah, look, I think that's right. I mean, that's certainly my view, and I think, you know, it's across the state, and Queensland's a very large state, and attracting people with those skills, as well as a raft of other skills, is going to be difficult over the medium to longer term. So, I suppose, you know, those pressures will emerge over time. I think obviously there will be a lull. You know, businesses, as I said before, they're compromised across all sectors, so there will be some sort of, you know, there will be some time before those pressures really start to impact, but it's certainly a consideration.
Yeah, it kind of puts the story offshore into the shade, really. But, you know, just to bring that into context too, you know, are you comforted overnight by the market reaction, or does the actual the swing higher, the almost vigorous swing higher, actually unnerve you a bit? It was such an extreme reaction to the upside.
Yeah, it seemed to me that, you know, watching these, the market react to these consistent, sort of consistently negative episodes out of Europe, you know, it's interesting. I mean, this time around we seem to have repaired ourselves very quickly. You know, I think there seems to be a resolve, or there seems to be a belief, at least, in the marketplace that you know, the powers that be are committed to resolving those problems over the medium term, perhaps not in the short term.
And you think that's sustainable?
Look, I think so. I think, you know, obviously there are some threats to that, but I think the market also believes that at this stage as well.
Thank you so much, Jim. Really great to get your thoughts on all of that.
Thanks, guys.
Jim Stening from FIIG Securities.